Hello, this is John Kvale, and I say this every month, and I really mean it. This is your June. Has June already passed us? Oh my goodness, June. This is our June financial planning podcast, capital market review. And since this all is also the time that we have our newsletter, I know you're seeing a lot of videos, but hopefully you will enjoy them as much as we do showing them to you. But before we get to the review, have you guys seen this? Really cool. And if you get a chance, this is only not, but it is really neat. This is where our, I'm going to turn it off because it's making a lot. This is where our holiday party is going to be on November 14th. I said I was going to keep this short, so I can't keep it, can't show you the whole thing, but if you get a chance, watch this video and be sure to turn the volume on. It's really cool. Okay, let's onward and upward. Our financial planning tip. This came from a conference where multiple estate planners were talking about accounting for our digital assets, which are basically our passwords. And after a good brainstorming session, this post, those of you that are listening, I'm linking to the post. Essentially what it is, and I did a video on this as well, we have a part of our vault that is not viewable to us, and you could put an Excel spreadsheet or your passwords in that area, and we would not be able to see it, and if something were to happen to you, we would be able to let your spouse or significant other get into that. So I thought it was a fantastic idea. We're going to continue to run with it. So here's the post, and then also on we've got a video on how to do it. All right, we did a two-part series here. I didn't know we were going to do a two-part series, but the big news kind of near the end of the quarter was the FOMC came out, and they had a meeting late in the quarter and really led a lot of market participants to think that they may be lowering rates. So I did a two-part, by accident, two-part series preview of the meeting saying that we didn't expect them to rates to be lowered, and they weren't. However, they did say, and this is, those of you that are listening, I'm scrolling down, they did say in their meeting that uncertainties about this outlook have increased, meaning that they think that potentially the economy is slowing a little bit. It could be insert numerous items. It could be the tariffs. It could be just, we're long in the tooth in this cycle. And I also included in the post, and in this, I included their estimate of GDP growth. And for those of you that are listening, I'm looking at a chart of the FOMC estimate of what they think growth domestic product, the broadest measure of economic growth in the United States, will be on 2019, 20, and 21. And where it is currently is much higher. I say much higher. It's 2, approaching 3, and they're expecting it to be around 2. That's not a recession. We won't talk inverted yield curve right now, which has been flashing recession signals sometime in the next couple of years. But ultimately, the FOMC is likely not going to raise rates. Market participants are saying that they really think they're going to lower rates. I'm hoping that we're not disappointed. There's a lot of runway between now and then, but it could or could not. So I got it back on the Perot Museum. I'll turn this off. We're really proud of that. We hope you can make it. And thank you for listening.